Well, hello. Welcome back to another Stock Market Open live stream. Today is a very special day. How special is it? We get retail sales data. I don't actually think this data is going to be bad. I mean, the consumer's been holding up pretty dang well. I think expectations that this is going to be bad are I don't know, surprising to me. Retail sales advance are expected to decline 0.2%, but that is because we had this crazy retail sales beat last month of 1%, and that was well above expectations. It was like twice expectations. So I don't fully understand how they come up with this stuff. It's like, oh yeah, it's going to be up 0.5%, and then it comes in up 1%. But then the next month is supposed to be down -2%. So is because last month it was hot, there a greater chance that this month it's going to be less hot? Nobody freaking knows. This is like a total coin toss here. But anyway, so retail sales is supposed to be -0.2, and then X auto positive 0.2, which means auto's weighing you down. And then X auto gas, meaning auto and gas are weighing you down at 0.3, and then retail sales control 0.3. We do also, in a little bit, get industrial production numbers, business inventories. That's all around 6 and 7, so that'll come out later. Those are a little less critical, and that's going to be it for data today. And then tomorrow you have Fed Day. So retail sales here, some folks think that this retail sales number will be the diktat that tells the Fed whether to go with 50 or 25. I'm not so certain about that. I think that the decision's mostly already in the bag with JPOW. I think you'd really have to have some really strong retail sales report here to go 25. Markets are now loading in a 70% chance, at least before retail sales data, 70% chance of getting a 70 basis point cut. Or 50 basis point cut. Hello. So, interesting. So, overnight, we got a little bit more pricing even that is giving a little bit more confidence. You know, there's also this chance that the Fed's just going to do whatever the market says. So, that's possible here. You know, so even though I don't think the Fed really cares about how retail sales data is going to affect these numbers tomorrow, it's possible that the market will care. And so if the market adjusts this figure substantially, well, then all of a sudden you could be in a place where, yeah, you do end up getting a 50 or 25 based on the retail sales data. Like if we totally unprice 50 because this comes in hot, all right, well, there you go. Then you'll have what you have. Anyway, here comes the data in about 10 seconds. So I'll go ahead and show the Qs here. You can see you're right under that 476.26 line. And the data is coming out right about now. Yeah, it comes in. Okay, that's kind of mixed. So the retail sales advance number comes in a little hotter than expected at 0.1 instead of the -0.2. But then the X auto comes in at 0.1, which is less than expected. 0.2, which is less than expected for auto gas. Control comes in at a match. So like, it's a little bit. It like told us nothing relative to expectation. Let's see what he says. And no revisions yet. I'll wait for revisions to come through.
Reason? Because last month we were up a whopping 1%. That was the best going all the way back to the first quarter of 2021. Now, before I'm done, there may be some revisions, but that was a good number, and we haven't taken any back yet, at least in terms of the new advanced look for August. If you strip out autos, it remains up 1/10. Many were expecting it to be a little loftier than that, but do remember also in the rearview mirror, we have up 4.
Uh-oh. I lost them. My bad. Oh, okay, here come the revisions anyway. That's okay. Let me get revisions are now coming through. Revisions now up. Wow, last month got revised up. You got revised up to 1.1 versus the 1 that you had in the prior retail sales advance. So you had
economic statistics higher up the food chain.
For last month. And then the retail sales control group came in at 0.4, which is also a revision up. So, I would say on balance here, Even though some of these categories came in a little lower than expected, the balance seems to be stronger. Retail sales coming in better by 0.3 than expected, and 0.1 higher on the revision. Control group matches here, but plus 0.1 on the revision, and then minus 0.1 on the X-Auto gas. So again, it feels balanced, but overall it seems like it's tilted towards the more positive. I don't think you're going to get any clarity here for the Fed.
There's delinquencies. We listen to what Phil said, and interest rates, of course, even coming down a quarter point, even coming down a full point if they do over the next 9, 12 months, isn't going to really take some of the pressure off those who need credit, because this two-speed economy still has many who don't need credit. And the Fed, no matter what they do with interest rates, it's very hard to target that group. We see that yields have moved up a little bit, but we're still basically at 15-month low closing yields in a 10-year, 2-year low closing yields going right back to September of 22 in a 2-year. And our last batch of guests really nailed it. The Democratic side of that discussion said, wow, we really have to fix the debt problem. They're currently in office, sir. Why don't they do something about it? Becky.
Oh. It looks like yields, by the way, not changed much here. I mean, I know they threw them up over here. Down 1/3 of 1 basis point on the 10-year, so not really getting any kind of movement there on the 10-year so far. It does look like the 2-year ticked up a smidge on the data. So you went from about 3.578 to a yield, let's see here, of about 3.59. So up a bip and a half there. Okay, let's see if we can get a little bit of color on those retail sales. Let's see, I think he's going through it too.
The GDP calculations. Where were we before? We were thinking it was a 3% quarter. So this really gets to the whole Fed debate right now, which is, do you really need to cut 50 basis points and show that you're really concerned about the economy when you're coming along here at a 3% GDP rate, maybe even higher once they plug in the revisions as well. So, and the consumer's not giving it up. My take on this number, Becky, is it's a bit all over the place. We do have a little sort of running problem with seasonally adjusting for, among other things, Prime Day in July. August is a little squirrely, so you have a bit of up and down with a bunch of the data here. Let me just go back here to.
All right, let me read this here. Advanced estimates for U.S. retail and food service sales for August, adjusted for seasonal variation and holiday and trading day differences, but not for price changes. We're an increase of 0.1 from the prior month, up 2.1% from August of 23. So year over year, up 2.3%. I mean, that's roughly okay. I mean, roughly in line with what I think we've generally been expecting for retail sales. 2 to 2.5% ish. Okay, let me see if I can get a table on this. Yeah, we can. Okay, let's go to the percentage change. Estimated change in monthly by kind of business. Okay, yeah, here we go. So let's see here. August advance from July. Okay, August advance from July. Electronics and appliance stores, negative 1.1. Furniture, negative 0.7. Motor vehicle parts, negative 0.1. Building material, positive 0.1. Gas stations, negative 1.2. Health and personal care stores, positive 0.7. That's the best. Oh, no, there's miscellaneous store retailers and non-store retailers. This is going to be like miscellaneous, it's going to be regular stores outside of department stores. And, so things you might see like on a main street that did really well, 1.7%. We did also see travel go up, right? In CPI and PPI numbers. Non-store retailers, so that's going to be your online, up 1.4%. That's pretty good. It's a pretty good pop there for online. So I'm going to make a little note here of the components. I always like kind of looking at the components to see what's under the hood, right? What do we got here? We got a 6-cylinder, or do we got an 8-cylinder? Oh, yeah, it's not on X for some reason. You're right. Thank you for that. It was supposed to be. Here, I'll put it on X. There we go. All right, so for those of you Xers, we just got retail sales, a little bit of mixed numbers here. you had a revision up of 0.1 on the advanced month-over-month. You beat by 0.3 on the advanced month-over-month over expectation for this month. Well, for August. X Auto came in 0.1 lower than expected. X Auto Gas 0.1 lower than expected. And Retail Sales Control Group matched with a prior revision up 0.1. Now, this is not a weak report. I think if I had to put it this way, it just sort of reiterates the strength of the report we had last month. Because last month, you had a 1% retail sales gain. So we'll say that. Reiterates strength of last month's report as retail sales up 1.0%, which sets a high bar. And we revised up another 0.1% and still came in positive at 0.1% this month. As far as the components, yeah, so you can see the Qs are happy about this. And that's putting them right on top of their 476.26 line. And, okay, the treasury yield's almost flat. Okay, so in terms of the components, we had non-store retailers, I think downtown, that's going to be plus 1.4%. That's pretty good. And that is the advance from... Let me see. Is that... I think that is non-seasonally adjusted. I don't think... Let's see here. Estimated monthly revisions, prior month. Sampling variability. No, I don't care about that. Okay. Estimated change in monthly sales for retail by kind of business. Okay, yeah. We'll just go with that. Non-store retailers up 1.4%. Then you've got, non-store retailers, think online. That's up 1.4%. MISC store retailers, think downtown, travel as well, up 1.7% from from July. Because this is a report that comes out in September, talking about October relative to July. Boy, that's a mouthful. Okay, food and drinking flat. Flat. Not a surprise. You're seeing a lot of pain in the restaurant business right now. And then health and personal care, positive 0.7%. Think Ulta. And then electronic stores and appliance stores, negative 1.1%. Any other category to really hit here? Yeah, I guess building materials, positive 0.1%, and furniture, think restoration hardware, negative 0.7%. Okay. All right. So we'll kind of see where the market decides to go. I don't honestly think this changes the narrative whatsoever, because this is in my opinion it's neither strong nor weak, right? And neither strong nor weak. And remember, you're not really in this place where, do we really think that retail sales should be what guides us as to whether or not we get, a 50 or 25? Well, my take to that is no. The reason for that is I don't want the Fed using something that lags like that. They already use enough lagging data like owner's equivalent rent. I mean, consider that when you have retail sales faltering, it's because the labor market has already been so damaged that retail sales have to go down. So no, it's out of order to really rely on retail sales to make a difference here. So not a big fan of suggesting this. I know there were a lot of articles over the night about, saying, oh, it's going to be retail sales. I don't think so. And I still maintain that. Well, first of all, we didn't get much clarity here. I mean, sure, if we had a blowout here, like a total blowout, maybe, kind of like a diaper when you forgot to change it, I get it. That might change the Fed's perspective, but this was not that. Okay, so let's see. What else? Okay, so that's that. That's that. Okay. Yeah, there we go. All right, good. So now there is a Nick T piece, and you can see markets really just bobbing around that support and resistance line there. So we're really not getting any direction out of there, although you could see volumes went up. All right, the decision. Okay, so this is Nick T's latest piece. Let's just summarize it. Nick T's latest WSG on Fed, WSJ on Fed. So here they talk. It's going to come down to Powell. It'll come down to Powell. He's the one who's been driving this unanimous action over there anyway. Economic data have showed that inflation has resumed its steady decline, but the labor market is cooling. Yes, the key issue for them is the balance of risk. Yes, said former senior Fed advisor. If you're more worried about growth and employment than inflation, you might well want to take out a little bit of insurance. Aha. Okay, so 50 BP is insurance against growth, employment issues. Okay, that's fair. The argument for a smaller cut rests on difficult considerations, suggesting the economy is fine, but that we risk higher inflation. 25 BP says economy is fine, but we still risk higher inflation. All right. Let's see here. The Fed advisor said a smaller cut would be appropriate. Fed advisor English said recently a smaller 25 BP cut would be appropriate, but recent labor trends said a few weeks ago. But recent labor trends pushed him to 50. Okay. Push him towards, I should say. There we go. Fed officials have tended to raise or lower a quarter, but when they move fast and they think their rates aren't very well aligned, 50 or 75 would work like they did when rates were going up. Until last week, investors had expected just a quarter-point cut. With inflation still above the Fed's target, given the economy is in a generally good shape, you could start with 25 and say, we can either keep this up for a while, or if things get weaker, go harder. That's true. But then it might be too late. Somebody's waving to someone. Multiple people here saying hi to Summer. Oh, there you go. Hello, Summer. Usually when I look over at the chat, people are like yelling at each other. So seeing people like wave and be nice to each other today is very odd. Anyway, Fed officials were non-committal about the size. Chris Waller said on September 6th that even if growth slows, even if jobs growth slows to 100K, that could be okay. Well, problem there is like if you keep that trend up, Fed officials often refer to their job as risk management. Let's see. Robert Kaplan, who served as Dallas Fed president. If I were my old seat, I could live with 25, but I'd prefer 50. Okay. So this is kind of two advisors so far, or old Fed cronies, saying 50. Okay. Because inflation hasn't been fully defeated, the Fed should avoid a situation where the economy weakens more and forces a faster drop. Oh, and could reignite inflation. That's a crazy argument. Oh, I haven't heard that argument before. Listen to this argument. If Fed is forced to cut more rapidly due to new economic weakness, the Fed might reignite inflation. Wow, I have to say, now you have people saying if they go 25, you could reignite inflation, but if you don't go Basically, yeah. I mean, that's in two ways. Because if you go 25, no, 25 would be to fight inflation, right? So now you have people saying if you go 25, you fight inflation. You fight inflation. Let's try to phrase this right. But if you go 50, well, if you go 25, you fight inflation, but you risk needing, there we go, to drop more in the future, which means you might stoke inflation with 25. Now, that is the most interesting argument I've heard yet. That's the most interesting case for a 50 yet. Kaplan is basically saying, by going 50 now, you reduce the odds of rapid cuts in the future, which could be inflation. So, like, bottom line, 50 BP cut equals lower inflation, opposite of what you'd expect. Wow. That's crazy. I hadn't thought of that. I have to say, I had not thought of that scenario. I had not considered that. That's interesting. Crunchy says, Kevin is way overthinking right now. Dude, I'm reading what he said and I'm translating it to English. How is that overthinking, you nutty? It literally, I'll read it to you. Because inflation hasn't been fully defeated, the Fed should avoid a situation where the economy weakens more and forces a faster, deeper series of cuts that risks reigniting inflation. I'm just trying to translate it to you who people are paying half attention. Maybe your coffee just hasn't hit yet, but good Lord. It's what Nick T said that Kaplan said. That's new information. Isn't that what you're here for? Fed officials are not likely to regret a larger cut. Okay, so this whole article screams like 50. They literally wrote that. Fed officials aren't likely to regret a larger cut. Okay, I mean, it's pretty blunt for 50 so far. Minutes from the Fed meeting show some officials were comfortable with the cut then, but preferred to wait. Right? Some were already ready to cut in July. The Fed's choice will be augmented by quarterly economic projections that show where rates are expected to be by year end. Yep, that's the SEP. If more officials project a total of 1 percentage point of cuts this year, that would imply at least one move of 50 basis points this year. Withholding that larger cut until later this year could raise awkward questions over why that is the best approach. Another option is to cut by 25, project a smaller magnitude of cut, reserving the options to accelerate. Right. Yeah, but I mean, they've always had the option to accelerate, and they haven't taken it, right? Option to accelerate cuts is always on table. I'm gonna write my own little note there and go, yeah, but yes, but they rarely use that. Powell could face, because this is a close call, maybe Powell will face dissent from the 12 policymakers. No Fed official has voted against policy in 2 years. Longest streaks in the last 50 years. Oh, wow, that's crazy. I didn't know it was that long. I knew it was a while, but wow. No dissent in last 12 or 2 years. Longest stretch in 50. Okay. This decision is close call. It's not likely you have half the committee at 50 and half at 25 and they're shouting at you. You have a bunch of people who are generally uncertain about what the right thing to do here is. In the end, Powell could probably build a reasonable consensus around either. Last line of the article. It'll be up to Powell. Okay, so if it's up to Powell, I'm gonna guess 50 is more likely. You know, his Jackson Hole speech implies 50. So if it's up to Powell, we're probably getting 50. All right. How did probability rates move? So we were at 70.8% for a 50. Now we're at still 70.8%. Okay. I thought that would have moved at least a smidge. It moved 0. Okay. Current, that's interesting. Current rate cut projections by market. So as when I saw the retail sales data, I'm like, okay, this doesn't really help us at all. I'll put this down at 0552. Before retail sales, 0529, we were at 70.8% chance of 50. After retail sales, 0552, we're at 70.8% chance. Easy. Easy. All right. CNBC is being boring talking about Instagram and children. And I am going to go see what the Doomers are saying. Nothing, because they're on commercial. Wow. Wow, how rude. How rude. All right. Fine. Fine, then. Fine. Okay. Now let's see what rates are doing. Oh, the 10 year's actually up 1.5 bips. That's interesting. So you got a little bit of a move up in yields after that retail sales data. Oh yeah. That's let's see here. Wasn't immediate though. It's really taken digesting some of the data. But sometimes you know what happens, and I see this a lot, is you get bond yields will go skyrocketing up. I mean, they look like they're skyrocketing up in the moment. And it's like somebody taking profits on bonds. And then, like, as the market settles throughout the day, you get the slowed bleed out in yields again. And yields come right back down again. It's been a pattern I've seen for quite a while. Okay, so let's see what other notes here are. This is hilarious. There's like this sort of like live blog from the Doomers. And there's literally one of the live blog entries, and they're separated by about 20 minutes, and they're right next to each other. So one of them says, retail sales to settle debate on Fed rate cuts. The very next entry, retail sales unlikely to change anything for the Fed. Oh, it's funny.
A 50 basis point cut, but there's certainly not been any data over the past few days that would push for one way or another. So he's going to have to talk people into it if that's what he wants. And can he do that? That's an interesting question. We haven't seen much movement in Fed funds futures or overnight index swaps since the retail sales numbers come out. Basically, the markets have decided we're going to sit here with a good odds on 50 basis points, but still pricing in the likelihood of 25, I think.
Mike, your guess. Are we going to get dissent?
That's a really interesting question. We were talking about it here with the Eco team in Washington. There is a theory that if you got a dissent, if they went 25 and you had a dissent, somebody wanting 50, at least one person, then you'd sort of have a hawkish 25, and that would reassure the markets that the Fed is staying on top of the idea that the economy could be weakening more. So it might be a communications benefit. If they went 50 and got a dissent, it would suggest that maybe the inflationistas were worried about that. And so there could be some communications aspects to this, to a dissent that we haven't seen in a long time. But it's been almost 3 years since anybody dissented, and none of the governors have dissented since 2005. So it doesn't look like that's a likely prospect.
Almost 20 years. I find that stat absolutely bonkers. Michael, thank you, sir. Michael McKee, looking forward to the coverage from Mike McKee tomorrow afternoon to break down this Fed decision. It is all to play for as this two-day meeting kicks off.
Can you imagine if an alien came down and heard our conversation about what the balance of risks is? I mean, basically.
So I saw that as well. But what they're really doing there is they're breaking down the difference between the Fed governors and the board members, and they're saying, oh, a governor hasn't dissented in a certain amount of time, or a board member hasn't voted no in a certain time, but combined, you haven't seen it in about 50 years. So it is kind of interesting that when you break it down by who's in what seat. So no dissent in the last stretch, the longest stretch, right, and the stretch is the longest. Well, I guess let me rephrase that. So, yeah, I don't think it really matters. It's been a long time. It's been a long time since you had somebody vote against it. I don't think they will, though. I think you'll probably have another unanimous breakout. Let's see if the Varnes has anything for us. Oh, Varney. And what's BTC doing after all this? Apple's down 20 basis points. Oh, Bitcoin's moving up, actually. Look at that. Finally got off the 57. What is it? The 57,580? Yeah, there it is. Look at that bounce yesterday. I mean, this is perfect. You ready for this? Look at this bounce yesterday. Kevin's line. Kevin's line. Kevin's line. Kevin's line. Moon. That's cool. Well, they're a commercial too. When does the Fed announce their cut? Tomorrow at 11 a.m. California time. So you get the cut announcement at 11 a.m. California time. And then at 11:30, you get the Fed presser. So for those 30 minutes, we'll make our bingo card. We'll go through the summary of economic projections. Yada, 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 yada. All that good stuff. Okay. So, yep, futures market. Just gonna give it a little refresh there. Yeah, no, same thing, 70.8% chance. You really just need some more like tweets or something from Nick T or someone to really push this up. You know, you've got you've really got this slow and steady move. Well, I guess it started a little strong, right? You went from like a 14% chance of a 50 to like a 40 to 50% chance on Monday to now you're at a 70% chance today. Let's see where it is tomorrow morning.
Still about a 30% upside from where it's trading at right now. Analysts say the stock's 20% decline in Q3 creates an attractive entry point. Last but not least, a big warning on Walmart coming from BTIG's Jonathan Krinsky saying he sees imminent potential for a pullback in the stock. He's pointing to the technicals with Walmart more than 25% above its 200-day moving average, according to his research. That's only happened one other time since 2000, and after that, the stock fell more than 20% not long after. But as you can see right now, year to date, those shares are up more than 50%. Joe, Becky, and Andrew, back over to you.
Thank you, Frank. We're going to take a quick final check on the markets. 141 points higher on the Dow. NASDAQ looking to open at 122 points higher, and the S&P 500 up there about 25 points. We'll also show you the Treasury boards. What's happening here, I think, is the speculation we'll get a 50 basis point cut. We will see tomorrow.
I wanted to know what Fed futures moved on the retail number. Now it's back to 25.
Back to 25. Yeah.
But the market's up.
Yep.
Which means can the market
Make sure you join us tomorrow to find out the answer. Well, the next day you'll find out the real answer. We'll be back tomorrow. Squawk on the Street begins right now.
Here comes Jimbo.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber at Post 9 of the New York Stock Exchange. Kramer is at one market in San Francisco. Dreamforce kicks off today. S&P looks to take aim at some record highs at the open following the Dow's all-time high yesterday. Retail sales solid. Fed meeting begins. Plenty of Mag 7 news from Microsoft to Meta to Amazon. Our roadmap begins with the Fed decision, though, just a day away as the Street debates how deep of a cut to expect.
On the tech front, shares of Intel are up sharply, at least in the pre-market. Lots of developments surrounding the company, including its agreement to produce AI chips for Amazon Web Services. Plus, Microsoft announces a dividend hike, authorizes a new stock repurchase. It's up to $60 billion in potential buybacks.
Let's start, though, with the markets. S&P is riding a 6-day win streak ahead of the Fed's decision tomorrow. Jim, and futures here look a little spicy.
Right now, we know that the industrials have had a little bit of run. The banks have been okay. Healthcare is all right. These were all the today and Friday. But this look, and yesterday, but this looks like today we're already setting up. Maybe it's perhaps because of the Microsoft buyback, a very good tone as we remember that these companies have a lot of power and have a lot of money. David, when you see a usual dividend boost, but a gigantic buyback, don't you think, well, wait a second, they can buy back $60 billion. Isn't that bigger than most companies? That kind of thing does create a level of confidence.
Yeah, the buyback $60 billion, not to mention what their CapEx spend is, and only going higher. Where are we, in the $50 billion plus? Yeah.
Yeah, something about the Intel Amazon deal I want to find out is Amazon actually in a place where, you know, they're expecting these chips anytime before, like, 2029? I'm kind of curious about that. Let's see. Intel solidifies, this was on the 13th, solidifies $3.5 billion deal to make chips for the military. Officially qualified for the Secure Enclave program. And this was my thought, was that the United States government would just prop them up, right? Yeah, here it is. Amazon, a multi-year framework for products and wafers. And jumped a bit yesterday on the Intel announcement. Explore potential for further designs. I just wonder when. Intel to reduce or exit 2/3 of its real estate by year end. Wow. Intel more than halfway to its 15,000 worker reduction target. Oh, that's a lot. Intel. So that means they've basically already fired 7,500 people, right? That's wild. Oopsies. But they're getting rid of 2/3 of their real estate, so they're really trying to consolidate where they're working.
When I think about what's going on in San Francisco and then these other cities, I begin to see the possibility. I'm going to see this today when I'm at Dreamforce, which is Salesforce's wonderful extravaganza for AI. Really the cars and buses that don't have steering wheels, and that's the future. They just look like little mini buses. And then, David, you don't have this oddity of someone not behind the wheel, so you feel like, well, wait a second, where's the driver? That's over, and I'm seeing these as being the next step when it comes to driverless.
Yeah, you know, it's an interesting and a long piece from your good friend. I think it's Tony Saganagi, isn't it, Carl? So I know you're going to read that with great interest. Of course, Tesla, we pointed out many times, has been a big beneficiary as well in terms of how it's training its self-driving in terms of generative AI and the advances potentially being made there as well. And we talked, obviously, to Derek Khosrowshahi last week about Austin being one of their key markets as they partner with Waymo. We'll keep an eye on both of those shares. You know, Jim, back to sort of the broader market, and again, as we pointed out yesterday a number of times, the very strong market last week preceded the week prior by the very weak market. Any takeaways from the trading yesterday in terms of how this week's going to go with this Fed decision, of course, sitting right in the middle of it?
Well, it's pretty amazing. We've got two markets. We've got the 50 basis points markets, and that moves all housing-related, and banks. And then we have 25, and 25 brings back the nation-state tech titans. It's almost as if, Carl, people think, well, if you do 50, you've saved the market and saved a lot of the industrials and the cyclicals. If you only do 25, you've hurt them, where then we start going back to these companies that have so big balance sheets that are doing so well that won't be hurt by a recession, and that's tech. Very binary, very stupid.
Meantime, Jim, I know Canada today printed 2% inflation, 2.0 year on year. Estimate was 2.1. They got the target.
Yeah, but then I come back and I listen to Phil LeBeau, and he's talking about the biggest expense for a lot of people is the auto expense, and it's more than $700 a month, and it lags. I'm on the warpath to try to find.
Looking at the Canada numbers, since they brought it up, non-seasonally adjusted month over month did come in weaker by 0.2%. Year over year came in at 2 versus the 2.1. And then the core number, well, the median number, I don't know what that is in the world, 2.3 versus 2.2. And then the core trim number came in at 2.4 versus 2.5. So mixed with a lean towards the downside.
That is starting to weaken. But, you know, it's funny, Jim, as much as we get 50-25, I had a conversation yesterday with somebody who's very senior in the world of finance, who said, well, I don't know why we're cutting it all. I mean, there is still a camp that says the economy is stronger than we're giving it credit for.
Wow. It's crazy to me to think that there are, and this is true, but there are people that are like, oh yeah, why cut interest rates at all? And I think that's actually what makes the treasury market so interesting, because when you actually, when you get a 50, or when you actually start getting these sustained cuts from Powell because he's realizing he's going to create a hard landing if he doesn't quickly catch up and create a soft landing, then I think you really start seeing some pricing moves in bonds a lot more rapidly.
And then there's the other economy, which needs far more than AI to be able to put up the numbers. And so we have these two different economies. And when you're out here, look, we're back in the bidding wars for talent out here.
Yeah, what have you picked up, Jim? I mean, you had some great interviews last night. I know we'll play some excerpts, whether it's from Hak Tan or Renee Haas, but what's the chatter given our endless conversation about AI? And, I would assume it's the same out there.
It's about who needs Jensen and who doesn't. I mean, if you need Jensen, you're in trouble and you're worried about allocation. And if you don't need Jensen, well, you know what? Then you have a pretty good run of the place. Hak Tan does not need Jensen. He does not need Jensen Huang. He does not need to make it so that he gets Blackwell. But David, we keep thinking about that little piece that you ran yesterday, where you had Larry Ellison talk about how he needs to get right with Jensen. That is the real subject of discussion. Oracle's resurgence from a 2% grower to something far bigger. Why? They've got it right with Jensen.
Yeah, Ellison now number 2 on the world's richest list. Dethrones Bezos, catching up to Elon Musk. Certainly Oracle up 20% in a month will help that. Let's turn to Intel, guys. Stock's getting a boost on this news. It's creating a separate entity for its foundry business that could allow it to raise outside funding. Company also expanding a partnership with Amazon, which now includes developing AI chips for AWS. This is Pat Gelsinger on Closing Bell Overtime yesterday.
This is a big announcement today. Amazon's been a partner of Intel for many years, but we've just taken it to a whole new level. Obviously, the 18A foundry agreement for their AI networking is a big deal. And Amazon is a discerning customer. They are, really sent us through our paces to prove that.
No, they're not discerning. Come on, man. They threw money at Rivian at the top. They throw money at anything, dude. and it's not just Rivian, but there's so many, and Rivian started doing better, but I mean, it's still a fraction of what it used to be. But it seems to me like Amazon, what they really want to do is secure their optionality, right? They don't want to be in a place where, let's say, there's a chip war between China and Taiwan, or not just a chip war, like a straight up war, and all of a sudden you can't get access to your chips. So how do you hedge your bets? Oh, yeah, we'll help you at the bottom. It's brilliant. They don't actually, there's so many contingencies written into these agreements. Nobody thinks about those. People only think about the headline. But Amazon's kind of brilliant for doing it. And they do it over and over again with companies. Even companies that have very, very low to no shot of success. The airliners do it as well. Like the airliners, they'll make, investments into multi-year deals with eVTOLs. And they don't actually think the eVTOLs are going to go anywhere. But if they do, they're hedged because they have a big investment into the eVTOLs. But they didn't actually make a multi-year investment into the eVTOLs. They're like, yeah, we'll promise to pay you, $2 billion over X number of years in exchange for multi-billions of dollars worth of your stock. And then contingencies written in. If that loses value, we don't have to invest as much. So they're almost really oftentimes net doing nothing. They're getting a balance sheet boost. They're spending no money up front, and they're hedging themselves. And the eVTOL company wants to do it because they get to brag about the partnership with the airline. So, it's all, rigged for messaging.
The German plant that is now paused. And to me, you've got paused, and then you have a lot of people in Germany talking about mothball, that they won't be made. So, look, I think, Carl, when I look at the company, it reminds me of when AMD and Global Foundries split off. I'm wondering whether we're just seeing a continual reshuffling of what they have, the assets they have, in order to be able to make it so the balance sheet is fine. But the balance sheet being fine needs to see a lot less cash out, and that's what happened in Germany, even though they promised Europe these plants.
We're beginning to see some pieces here this morning, Jim, the case to buy the dip, but I don't think you're quite there yet.
Meanwhile, you don't have to sell the surge.
Yeah. Meanwhile, speaking of AWS and Amazon, we did get that memo from Andy Jassy yesterday telling employees to return 5 days a week. Kind of takes me back, Jim, I think it was 21 when he came on and talked about sort of the stitching, the glue among employees that you lose when you try to innovate remote.
One of the things that was, this was incredibly talked about at Dreamforce, and incredibly talked about, is Andy Jassy is uniformly known as a real good guy. Kept a lot of people on after the pandemic until they could figure out who should be laid off. But this decision is, some people are saying, is a shakeout. He wants to find out who is truly committed and who isn't, even though there are people already grandfathered. You know what, David? A lot of people out here are convinced that remote's better than going to work. And I think that that's a cop-out, because if you want to try to rationalize and make your workforce have mentors and people who can figure out
blah. All right. Get people back to work. Got it. All right, so let's see what other news there is. Let's see here. Well, where do we sit on the Qs? 68 basis points on LQs. Qs or do's. All right, let's see here. 5-day return to work. Yeah, somebody wrote on X, this is how you lose all your good senior employees with families. And there are a lot of people that have moved to different locations after the pandemic. So, okay, let's go to Financial Times, see what we got over there. iPhone 16 already selling at a discount in China? Shut up. Well, I love Apple, okay? I think they're a phenomenal company. But I'm disappointed at the latest launch. I want to tell you this just because I think it's entertaining. So Lauren, she's like, Kevin, you made me skip the iPhone 15. Now it's my turn. Give me the iPhone 16. You're skipping the 16. I don't care. I want the 16. Let's go. I'm like, all right, you win. Let's go buy the iPhone 16 for you. So you ready for this? This is how it went. This is exactly how it went. We go to the Apple website. We go to pre-order. Apple, take notes. And Apple's like, where are the cool, or Lauren's like, where are the cool colors? I want the cool colors. And I'm like, oh, they must be the other phone. So I go here to iPhone 16 regular. And I go, she sees this come up. She's like, yes, Kevin, that's what I want. I want the color. And tell me what the name is too. I want to know what the name is. And so I scroll down. Where is it? You go to pre-order. I scroll down, pick your finish. I go, all right, which one? She's like, no, not the pink one. I go, okay, which one do you want? What's that bluish one? It's ultramarine. And her face is like, I knew they would pick a unique name. I'm like, oh my God. So I'm like, okay, all right. Do you care about the features? She's like, no. Like, okay. So she's like, as long as it's not a downgrade. And I'm like, okay. So let's see here. Let's go to compare phone models. And let's compare to what you have, which is the iPhone 14 Pro. And let's compare it to the iPhone 16 in the color that you want. And I'll just throw the iPhone 16 Pro right here. Okay, so I go, hers in the middle here, right? And the one she wants is on the left. So I'm like, hey, it's the same size. You're gonna lose the always on display. She's like, that's okay, I don't need that. Then I go, you're gonna lose the ring silent switch and you get the action button. She's like, all right. You don't get AI. She's like, okay, I don't really care about that. And then I say, you do get the new camera control button. She's like, yeah, I don't care about that. And then I'm like, okay, you get the spatial videos. She's like, yeah, okay, cool. And then you lose an hour of battery life. She's like, I don't want it anymore. I go, what? It's like, I don't want it anymore. I go, what do you mean? It's like, I don't want to downgrade. I don't want to lose an hour of battery. And you know, the ring switch, like I like the old ring switch. I kind of want to keep that. And she's like, all right, I'll do it. Like, which model is gonna not downgrade me with battery life, and get me the color I want? I go, well, you'd have to get the iPhone 16 Pro. And then she's like, fine, what are the colors for that? She looks at these colors, she goes, those are shit, I don't want it. Never mind, I don't want it. I'm like, all right. So that was Lauren's iPhone experience for you. So we did not order Lauren an iPhone, so she's with the 14 still. We're like, are you sure? She's like, yeah, I don't care. Okay. All right. So anyway, I guess industrial production numbers just came out. I don't know that we really care about these numbers, but industrial production, oh, it comes in better than expected. 0.8 versus 0.2. That's kind of like the Empire manufacturing number. Capacity utilization a little higher than expected. Pretty good. Industrial production coming in at 0.8 versus 0.2. That's great. Slightly extra downward revision, though, of negative 0.3 for the prior month. So you created a little bit of a hole there for the prior month. Doesn't look like the market really moved on that news. Not really. And yields slightly ticked up after that. But the market's pretty stable. Okay. I don't think any of that really matters. All right, so Apple's iPhone 16 already selling at a discount in China. No. Let's see this. Online retailers in China have slashed the price of the new iPhone 16 ahead of the official release. Wow. The iPhone 16 Plus with 512. Wow. Okay. China. Well, that's where you have a lot of competition. Like, way more competition in China than what we have out here for phones. So it looks like the iPhone 16 Plus with 512 GB is selling for $1268, a 10% discount. iPhone 16 at 11% discount. Ouch. Already selling the iPhone at, I mean, like, it's not even out yet. Alibaba has also put a discount on it. Okay. That's on PDD, that's the same company as Temu, and then Alibaba selling it for a 4% discount. That's interesting. Discounts suggest soft demand. Yeah, they released the software, by the way. The new software here, what's it called? iOS 18 or whatever. It finally came out of beta. I had the beta on my iPad, but it finally came out of beta, so I downloaded it on the phone. Yeah, iOS 18. I have not noticed a single AI feature yet. I know the texting colors and stuff have changed a little bit. I remember that from the iPad. Let me see. Maybe it's in the Notes pad. So if I go to Notes, 5 plus 3 equals. Yeah, okay. The calculator will work now inline. But we saw that on the iPad too. So I mean that's cool. All right, what else here? So what else here? Let's see what some folks here have. iPhone's too big these days. iPhone 13 Pro is the biggest I'd prefer to go. Oh, you don't like it that big. How many words per minute does this guy type? 69. Let's see here. I have not noticed anything game-changing with the iPhone since the XR. Someone here. China's going to be very competitive here. Yeah. I have Apple 10-4 contracts at 175. Are those calls, I hope? Because you'd be way in the money if you do. If they're puts, you're way upside down. If we take all-time highs, does it invalidate your bearish view or make you more bearish? Well, it doesn't make me more bearish. It makes me less interested in buying stocks, right? Because the higher valuations go in the face of the October problems that we have, the riskier you're making your bet, right? So, not ideal to to dive in at all-time highs. It's not to say you can't go even higher, but wouldn't exactly make me bullish. But the higher the market goes, the lower the odds of an unemployment recession. Remember, I really think we're one market correction away, one stock market correction away from, a recession. October problems, nervousness over Q3 earnings, nervousness over new data, since I don't think this Fed meeting is going to give us certainty, nervousness over the election. You're going to get peak nervousness in November, everything together. Earnings, election, CPI, jobs, no Fed meeting. The amount of potential volatility in October was going to be crazy. So, if they cut rates tomorrow, is the 20-year note yield going to go up? Well, I mean, it depends what they cut. If they cut 50, the 20-year note rate will probably go down. So, something like a TLT would go up. And if they go 25, well, you'll probably actually see yields go up depending on what they forecast. So, we'll see. All they need is a foldable phone. No. Love the iOS calculator app. It's pretty good. Yep, real estate funds still coming for Housesack in the future. That's the plan. Wells Fargo, Visa Cash, $600 phone insurance. I don't know what that means. All right, very well. Could they just cut the BS and cut 75 bips? Would be very unlikely, but sure. I mean, technically, they could do whatever they want, eh? It's just very, very unlikely.
Now, Nucor reported earnings, Jim. What do we think?
Well, they give you that prelim that always tells you what's going to happen when they actually get to the end of the quarter. And, Dave, it's not good. The reason why I say it's not good is while I'm looking for weakness, I don't find any out here. But we learned that Nucor's probably going to earn $1.30 to $1.40 this quarter. We had been looking for $1.89. The reason for the decline, the shortfall, lower volumes and lower average selling price. David, this is where there is weakness in steel. And we know, by the way, if you look at the chart of Cleveland Cliffs, it's been dreadful. So if you want weakness and you want to find it, steel will tell you where it is.
So what's the takeaway here then? Again, given this guidance range is deeply below estimates, as you just pointed out.
Well, there's two. Look, you could go with what Cleveland Cliffs is saying, which is that it's an invasion of Chinese steel through Mexico, and it's not being policed by our government. Or you could say that maybe autos and construction are weaker than we thought. Those are two steel markets, although, by the way, it's really you could say it's Cleveland Cliffs that dominates the autos. But when you see this kind of wholesale decline in average selling price, what that means is just there's just not a lot of demand, not necessarily that there's a plethora of supply.
Interesting. All right. Keep an eye on shares of U.S. Steel as well. Some of the others that you mentioned, Cleveland Cliffs. Jim, we'll see you in a minute. We got the opening bell just a few minutes away. Don't go anywhere.
We will. We're going to go right here.
Travel and cutting back on air shows and charitable donations. Finally, Instagram is rolling out new privacy settings for teens. The social media platform will make teen accounts private by default, limiting the use of private messages. The app will also block teens from seeing sensitive photos and videos. These restrictions will be turned on automatically for all Instagram users under the age of 18. Those restrictions for those under 16 can be relaxed if a parent gives permission.
Under 16?
And Matt, I mean, aren't
Can you
teens,
be on Instagram if you're under 16?
don't they just lie? Can't you just lie about this and say, like, I'm my own parent, I'm turning on the restrictions off? Like,
But-
how is this gonna work?
I mean, would you give your kid a cell phone under that, like, access to those things? I don't think that would be allowed in my household.
I think kids should only have Motorola flip phones
Yes.
until like 20 anyway.
The
I think
Razor.
that's-
The Razor
yeah.
is what you get until college.
Yeah, I had one. I blinged it out. It was pretty cool. It's pretty sweet. Had some bling on it. Anyway, you can follow all the latest buzz on TREN Go on your terminal this morning. Matt, futures doing anything?
Yeah, let's, well, exactly what they were doing last time we looked. S&P futures up 0.4%. A little bit of rally in the small caps. Russell 2000 up 1%. The closing bell is next. This is Bloomberg.
Wait, did he say the closing bell is next? I'm pretty sure he just said that. The opening bell is next. But anyway. Oopsies! All right. The breakdown in retail spending suggests payback from July's strong numbers, but also reinforces the case on a cautious consumer. Okay, spending around has largely moderated this year, which will feed into bets for a large move from the Fed. Retail sales slowed from July's pace. I guess that's one way to look at it. Retail sales. Let's see here. Okay, so distillation by Bloomberg. So it says here, retail sales slowed from July, which was revised higher. So July stands out as an outlier in all of 2024. That's interesting. The report didn't really settle the debate on the size. That's fine. Spending accounted, chart below function shows online spending accounted for the largest. Yeah, we noticed that as well. Online spending was the largest category. Stripping out essential categories showed discretionary categories remain anemic. Discretionary categories, quote, remain. If Powie reads this, he's probably going to go 50. 3-month moving average to smooth out retail sales indicates spending is largely losing steam. Ah, interesting. Okay, I mean, that to me confirms 50. Because Powell reads this stuff. So that's why I read it. And I think if Powell's going to read this 3-month moving average on retail sales, largely been losing steam this year. Consumers are turning cautious. Yeah. Latest report. Let's see. Okay. Evidence is starting to support a 50 BP move. All this is the stuff that sort of like manipulates the futures market to like price in a little bit more 50, a little bit more 50. I think through the day, like by market close, I wouldn't be surprised if we're at an 80% chance of 50 tomorrow. Right now we're at about, it fell a little bit, 67.5. But I think that'll tick up. We went down about 3 percentage points there, from 70.5% to 67.5. But I actually think as the day progresses, we'll move to a greater chance. Anyway, the bell. Oops. Ding, 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 ding.
Technology.
Loser.
S&P, then it's going to happen.
All right, well, let's see what's going on. Okay, it's too much talk about the Fed. So, you're right at the line for the Qs. So this is where you got to do some real balancing here. Adobe is trying to start up 81 bips. Okay. Okay, there we go. Here comes a little bounce. That's nice. Okay, all right, there we go. Right off the line. It's a good line. Look at that. Nvidia's well above 108.08. It's on its way to 125, frankly. Apple's barely down, only down like 23 basis points. Pretty optimistic day here. You got IWM trying to go up here, about 77 basis points. Meta's up 66. Amazon's up 143. Bitcoin's happy. Enphase happy. You got the mortgage companies are happy. Wow, Tesla 2%. Look at that open. Whoosh, rocket ship. This is right above our 230 line for Tesla. Palantir up another 1.3%. Now sitting at about 36.8. Dave & Buster's 3.2. Space Mobile's back to $30. Wow, Roku's up 1%. I mean, Roku's been on a little bit of an upward trajectory here, huh? Yeah, look at that. Bottomed at $48 not that long ago, beginning of August. And straight up from there, now it's 75. ARM Holdings, 142. This is pretty green. Do we even have any red? I don't know that we do. Let's just go to this list and go to negative. Okay, here we go. Trump Media is negative. If you take out the shorts, you don't have a full list of red. That's pretty green. And Intel's the largest up at 4. Tesla's doing really well too right now. Rivian's doing well up 2. Restoration Hardware up 2. Redfin's up 2. And let's see here. Look at that Tesla rise. Almost at 3% now. And let's grab Redfin. Yeah, Redfin's at like $14. Pretty good. And a little bit of breakout there. I don't know if it's going to hold. Yeah, it looks like it wants to. That's pretty good. So let's see here. What other heads ups we're getting while we watch this little pop on the day before the Fed. Let's see. Let's see. Okay. Trying to see. Nick T's tweet was mostly a summary. Nick T's tweet was mostly a summary of the article we already went through. So the case for 50 comes down to risk management. Yeah, Nick T's basically just tweeting pieces of his article. All right. Well, that's interesting. All right. Then let's see. Traders are still betting on a big Fed rate cut. Yeah. We'll see how the market actually moves. Oh, wow. 1 million are now dead or injured. Oh, dead or injured in the Russia-Ukraine war. Yeah, I didn't think we were... Because Trump said millions were dead. And I'm like, where's he getting that number from? I thought it was like 400K dead, which is still a big number, but it certainly wasn't millions. I'm like, wait, I'd like to fact check that. Yeah, no, okay. 1 million dead or injured. And certainly not millions yet. We just hit that number. All right, the 20-year Treasury is now down. What do we got here? The 10-year's flat. The 20-year Treasury is down 1.4 basis points. The 2-year Treasury is actually up 33, or 3.3 basis points. So if I go to the 2's 10, you should see some direction towards inverting. Yeah, wow, that's interesting. You just went from about 7 points uninverted to about 3 basis points uninverted. And usually, remember, the biggest pain is when you get a big spike up, like a sudden jolt up, some kind of shock, and then that's the same moment you trigger a recession. So you get this spike up in the 210, on some kind of shock event. We don't know what it is. And then you get, market falls, then you get layoffs, then it happens very, very quickly, unfortunately. Obviously leading up to it, you get market rallies, you get market volatility and all this, who knows? So, kind of interesting. Okay, what else? So, market's broadly positive here. A little volatility on the Qs, but, lost that 476 line, which I think is pretty important. Looks like NVIDIA trying to start trending down a little bit after a nice little run. Apple's probably falling on those price cuts in China. And Enphase lost 112. What else here? Palantir gave up a little bit of its almost 2% there. It was doing really well. It was up almost 2%. It's now at 36. Still a great number. Etsy, 41 bips. Tim Apple missed big on AI. Time for a new CEO. Ouch. Calls to replace Tim Cook. Ouch. Somebody here says, just sold all my stocks. 0 left. 0. Wow. Yeah, that's interesting. It's, really to be at 0 stocks, you have to believe that a recession is more likely than not, which is very possible. It is absolutely possible. So somebody here says Zroz versus TLT. Well, the Zroz thingy I just looked at, I don't know what it is, but it looks like it's PIMCO 25-year 0 coupon. Now that's interesting. With 0 coupon means the underlying value of the ETF goes up with it. This is actually probably a little bit more desirable than TLT because, if you go for an option on TLT, you're not getting the yield. So you're probably better off in a 0 coupon. So that's an interesting one. I don't know what the fees or the components are of that one. So that would take a little bit of looking into, but realistically, they're probably pretty similar. With 0 coupon, but it's showing a dividend yield of 3.7%. Yeah, I'd have to look into that one. I don't understand that one fully. Well, we'll find out about that one. But that's the thing, you really got to go through the prospectuses on these just to understand what what the disclosures are, what are the fees, what can they not do. Yeah, no, there's a distribution yield. That's weird. All right. And I still don't know what their fee is. Fee. Whatever. Oh, there it is. Oh, only 0.15. Well, that's not bad. Oh. I'll have to dig around and do a little bit. All right, now you're at a 69% chance of a 50. The bobbing around, that's funny. Okay, somebody says Intel is collapsing. Okay. Intel. Oh, I guess that was a few minutes ago. Going back up. DJ Tizzle. Yeah, DJT keeps bleeding. Well, I mean, I don't think people are really going to believe when Trump says, oh, I don't plan on selling any of the DJT stock. Dude, this election's over. He's going to dump all of it, is my guess. I mean, it's a company that's not profitable. And I don't know that there's really a trajectory for it to become profitable. But, oh well. So, let's see. What other news is there? Well, bond traders focus on supply and growth clues. Supply and growth clues. Okay, in retail sales. U.S. Treasury investors are focused on growth implications of today's retail sales report for August. Strength in control group, coupled with 20-year bond supply, can keep curve flattened today. U.S. retail sales unexpectedly rose in August, pointing to a healthy consumer. Control group was in line with estimates. Yeah, but it's still slowing from that 3-month pace or the pace from the prior month. I get it. Okay. All right. So you kind of read it however you want. You know, what side do you want to pitch? oh, better than expected headline, or yeah, but it's still on a downtrend. I don't know. Okay. Oh, yeah, let's see what we got here. Dow at record high.
Describe how AI is going to change, say, law enforcement and police departments and drones and surveillance cameras, and the ability to commit a crime is going to get narrowed down to a very short window because AI will be so quick to detect your movement.
What was the Tom Cruise movie?
Minority Report.
Thank you. Yeah. Minority Report. Yeah. Is that where we're going, Carl? Yeah.
Literally. Slightest
the what were they called? Precursors?
Pre-crime.
Pre-crime.
And Max von Sydow.
Yeah. God, that was a good movie, actually. Yet another great movie from Tom Cruise. Don't remember when he ran in that. Oh, he ran in that movie. 2002. Thank you. Yeah.
It's that Constitution. Always gets in the way of this stuff. But boring Constitution still in the way.
Jim, you mentioned.
Don't worry about that, Jim. Don't worry. We'll take care of that. Don't worry.
Oh, okay. As long as the Bill of Rights is maybe preserve 6 out of 10, maybe, give us a couple.
Jim, you mentioned holiday spend. Couple things on spending. One is that this Challenger Grand Christmas report says seasonal hiring will be lower than last holiday season.
Car for Coin says more crypto. More crypto. Yeah. Should do fine if you avoid a recession. That's the big one there. BTC right now dropping a little bit, but that's the big one I like watching. Is just the thesis is no recession, fine. People are happy with risk assets. Nobody's upset. Everything's fine. If you get a recession, risk assets might be a little poopy doopy. Looks like Costco's red today. Let's see what's going on with Costco. Oh, not by much. A little bit of red. Let's see here. Apple's still down about 23 basis points. Big deal. Amazon's almost back at 190 though. And Tesla at 232-ish. It's pretty good. Yeah, then you've got Q's slipping a little bit though, huh? I don't like this line. How about the SPY? Where are we sitting with the SPY? 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 Oh, look at that. Look how close you are to all-time highs on the SPY. Because you previously hit this twice now already. You had your double top. You're technically over it right now. Yeah. Look at that. SPY all-time highs. Yeah, right there. Look at that. That's remarkable. Not quite there on the Qs. Still got, 8% or so to go. Yeah. Oh, there it comes. Still got that work to do, but it's working on it. Okie dokie. Let's see, what are they yelling about?
Now you're making things up. Now, I hate when you do that. Because we talked about things that actually happened. I did sit here on the IPO, Kava, and you were very positive, and I was like, but I've never, ever, ever questioned you on NVIDIA. Not once, and you know that.
Absolutely, it was a straw man, but I felt like saying it because I'm out here.
Jim, you mentioned some of the restaurants. I'm sure you saw the Starbucks North America chief, Michael Conway, going to be leaving after 5 months on the job.
I think that one of the things that Brian Niccol did when he got to Chipotle was bring in his own team. And also get rid of lots of positions that you didn't necessarily need. Now, I'm not saying this man's position wasn't needed. I am saying the organizational structure of Starbucks was Byzantine. And maybe we get some clarity, and maybe we get some Brian Niccol people in, and you need them because I'm hearing from a lot of people who, of course, are Starbucks people. There was a machine that I saw at Salesforce, a machine that can make 25 drinks at once. This is what Niccol needs. And the machine seemed, it wasn't like I was asking for a shaken, not stirred martini. This machine can make a lot of lattes.
All right. Is the machine just a prototype at this point, Jim?
I think it's ready. it's ready to go. And I think that Brian Nickel should buy everyone they have, kind of like what you need to do with Jensen and Blackwell. He should buy everyone they have, and then maybe every drink will be the same. Well, no, maybe you'll still get to be able to say 3 pumps, 2 triple venti, skim, wet, hot. I heard one. Get this.
Is this some nonsense? What is this silliness? What is this? What is this? It's freaking out today.
Because these were the banks that, in the trial of Bill Hwang, were painted as victims. So
Such an Art Deco set.
to them now.
That's exactly right. During Bill Hwang's trial earlier this year, the banks testified about how they were misled by Archegos and Bill Hwang, but now antitrust investigators are looking at some of the conversations that those banks had after Archegos collapsed. So in the days in March 2021, when the banks held a number of conversations about whether they should have a orderly liquidation plan to sort of minimise their losses. Some of the banks like Goldman Sachs and Morgan Stanley split early and unwound Archegos's positions, but others like UBS, Credit Suisse and Nomura agreed to a slower kind of liquidation. So antitrust is looking at whether that amounts to collusion or at least a conspiracy to collude to control stock prices.
And they lost the most, right? The banks involved in the alleged collusion are the ones that took the biggest hit.
That's right. Those 3 banks that I mentioned, UBS, Credit Suisse and Nomura, that slowly unwound their positions and had an overlapping of different block trades. They were saddled with the lion's share of the losses. Credit Suisse alone lost more than $5 billion.
First, I want to say this was one of the most exciting trials that I've ever followed on the Top Live blog. Like, it was amazing the way you guys reported this out. And I just wonder, did the banks in that testimony during that trial give any information that could be used against them now in this investigation?
Not that I heard of. It was very much focused on the information that Archegos and Bill Hwang and his lieutenants provided to the banks to be able to get more money from them to further his trading. So it was very much about those conversations, what Archegos had articulated about the extent of its positions with other banks. And its
the fact that this guy was able to go to different banks and basically leverage his assets over and over and over again is still kind of hilarious to me, because it's not like there's like a title report like in real estate where, somebody pulls up the title report and goes, oh, there's already a loan on the house, I guess we'll have to refinance that. That doesn't exist in stocks. So what do you find? Oops. They just over leverage it by leveraging it at every bank they can get in touch with. It's kind of funny. I don't even know how you solve that and prevent that from happening again. Anyway, Tesla's trying to knock on its 230 door there again. 10-year treasury yield's up about 2 basis points right now, so you're getting a little bit of a pop here. I was expecting it to be more of a direction down there, and that's still possible towards the end of the day, but not seeing that right now. And then the 20-year, probably, 20 years up half a basis point. And so also a little bit of a pop. Let me see here. Do we get any data here? I know we had industrial production a bit ago. We just got... No, nothing yet. Next would be business inventories, but that's a pretty boring read, and that comes out at 7. But yeah, a little bit of a bleed on some of that enthusiasm coming through right now on both Tesla... SPY's still barcoding. Q's trying to rotate down a little. Nvidia's really giving up. It's run there. I mean, it was up a couple percent, and now it's almost at 0. IWM's still trying to push. This is that sort of broadening out of the sector that you're seeing. Look at Amazon, right there at my 188.65 line. Bit of a reject. What else do we have here? Oh, look at that. Rejection at the 113 line within 13 cents of it on end phase. Lone Depot up again 4%. That one's very volatile. Wow, Palantir goes negative. They were just up 2%. And after being up 2%, now they're down almost 1%.
Lost the lead.
Wow. Space Mobile also turning down a little bit. So I lost my headset there. What happened? There we go. Oh yeah, Space Mobile a little more volatile now. Okay. So what is happening? Yeah, Tesla just to its line. But yeah, I also got a few candles here. Early market volatility. Let's see here. Mohammed Alarian. As detailed in the tables below, this morning's U.S. economic data point to a resilient economy that continues to overcome a host of headwinds. Retail sales are consistent with the view that considerable economic pressures on low-income households are not impacting the level of overall consumption. Industrial production is showing the U.S. is doing better than expected. Interestingly, the data releases only marginally impacted Fed rate cut expectations, still favoring a 50. Yes. Yes. 69% chance of a 50. Okay. Fine. What else? I don't know. Who's this guy? Trump's banker. What's this?
Who is this man? Thank you so much. Well, I just want to say that one of the good things about being a journalist, like a reporter, is that, we go through life being like, who is anybody? Other people, whether or not they're powerful, are like a total mystery to us, I think. And one thing that was really fun about writing about Gregory Garibrandt, who is the CEO of a relatively small bank called Axos, although actually I should say it has gotten much bigger over time, is that I went into it knowing very, very little about this guy. And by looking at a couple of things like lawsuits, and also by doing a lot of interviews, I ended up with what I hope is like a pretty colorful and I hope a really accurate portrait of a guy who, he is willing to do what it takes to win in his way. And that means, I don't want to give away my fun story, but it means getting into lawsuits with, short sellers, and Axos has had a lot of short sellers, or at least a group of very intense ones. Whistleblowers, his kid's school, believe it or not, his neighbor. He's a guy, he says he's not litigious, but what?
Takes that, yes, not litigious, but I will sue you. I will sue the school. I will sue your mom. Look at that, like, perfect bounce on Tesla. You just, it's almost like the lines have meaning. They're telling us something. Yeah, trying to really hold that 230 there on Tesla. Nvidia still holding on to positive. Apple's almost positive despite that price cut talk in China. Seems like people don't really care, or maybe that's already sort of assumed. IWM, nice little push there, almost up 1% now. You're now like $13 away on IWM from where what's his name, the the Tom Lee guy said it would be up 40% from there. So you're almost back to there. Yeah. Okay, let's see here. So no Doomberg. And let's go to no. CNBC, nothing. Okay, I think we got data 6 minutes away. Not a lot of data, but some data here. Yeah, okay. Let's see, what else here? Microsoft still up almost 2%. Pretty stable. Ethereum 2300. Oh, Nvidia just went red. How interesting. That usually pulls the Qs with it when Nvidia goes red. Yeah, it does. So I wouldn't be surprised to see some selling before the Fed just out of nervousness. But yeah, 10-year Treasury's up 2.6 basis points now. Seems like you're getting that bond profit taking again, which also makes sense because you've had quite a bit of a run into this meeting. Chances of Tesla breaking 230 this week? Yeah, I think a lot is going to come down to what the Fed says. I do think there's a real risk that, people think, oh, the start of the rate cut cycle, everything's going to go to the moon after that. I don't know. I think the level of uncertainty that we get is going to be so substantial from the Fed that you might create some nervousness. Why is UAL doing so well? Well, I think you had a lot of fears in the airlines going into the summer that things were getting really bad, and they were for a period of time. And you had that recovery in that CPI data on airfares. Probably why. You know, because you had the indication that airfares were rising again. And so that's either probable or potential, at least potentially why. Let's see the timing of it. So United Airlines. Yeah, that's pretty close to where CPI was, honestly. Well, the August 5th bottom, that's fine. But CPI was right around here. CPI release schedule. Let me see. You had August 14th. Yep. Right here. This is when you had CPI. Here's when you had the carry trade blow up. And you've kind of had an uptrend approximately since then. They've taken a moment for markets to sort of realize it. Nice. Tesla bounce. All right. What else? Ooh, there's Nvidia. Nvidia's coming back. All right. What else? Data. 4 minutes. 4 minutes. Didn't they have a Starlink deal? I think a lot of airlines have had Starlink deals, but that could be a contributor too. United Airlines Starlink. I mean, that's very nice. Let's see here. United Airlines to provide passengers with free Starlink soon. Oh, that was over the last couple days. Oh, well, that's cool. In the meantime, I guess Israel was able to make a bunch of Hezbollah pagers explode. Can you imagine that? Your pager rings and then it's just an Israeli bomb. That's just a bad day. Also kind of makes you wonder how Israel pulled that one off. Hey guys, try these new pagers. They're totally safe. Or you just, probably you have to figure out how to rig the existing ones. But man, that would take some spy stuff there. Rigging someone's pager. You have to get them like while they're sleeping or something. But then if you're already there while they're sleeping with their pager, like, you kind of just kill them then. Sounds really gruesome, but kind of true. So, or they got a new shipment of pager. Oh, new shipments, guys. Yeah. These aren't rigged to be bombs. Yikes. Anyway, okay, so now you're at about a 62.5% chance of a 50. So far going in the opposite direction there of a 50. Still favoring 50. No additional kind of commentary that I could see on the Fed. And then a little bit more data in 1 minute. So Waller seen as potential Fed chair, won't welcome Trump's input. That's not a surprise. Industrial production rebounded after hurricane-related drop. Market is having a tough time mapping out what the Fed's gonna do. Yeah, that's fair. Clear downside risk to the economist expectation for the 2024 dots. Yeah, the dots. We'll know more after tomorrow. Well, duh. But everybody wants to know what's gonna happen tonight. No problem. It will require patience. All right. So it's now 7 and business inventories tick up a smidge at 0.4 versus the 0.3 expected. Again, I didn't really think that was really going to do anything, but and then you have the housing market index matches 41, a little up from that 39 you had prior, but again, another no real change there. Okay, fine. One look here more. Nvidia going back to going up. Costco's slightly down, but not a big deal. Tesla's still holding on to 232. Q's trying to come back to 476. Restoration Hardware, not a lot of bids there. Oh, what else do we have? Supermicro, 450. Oracle's actually down a little bit. Enphase, still trying to get to 113. LDI, out of all the mortgage companies, is actually up a chunk. Cheesecake Factory, 3%. Maybe on retail spending. Roku up a couple. Etsy's up 20 bips. Oh, JP Morgan. JP Morgan's flat. Oh, it's flat. Flat. Peloton. $4. Oh, let's see. IWM last we looked was like 1%. Let's see where it's this now. Oh, wow. That's weird. It was running like crazy. And now it's rotating down. Crazy market.
Pre-COVID, to find a number under 40, you had to go all the way back to the summer of 2012. We've had some strength in manufacturing today, stronger than expected retail sales and industrial production coming in at a whopping 0.8%. 20-year auction at 1 o'clock Eastern, $13 billion. Sarah, back to you.
Oh. We'll turn to you for those results. Thank you, Rick. As always, Rick Santelli. Good Tuesday morning, everyone. Welcome to another hour here of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live for you as always from Post 9 of the New York Stock Exchange. Stocks are higher this morning, up 1/3% on the S&P 500, and consumer names are leading the charge. Consumer discretionary up at the top of the market. Airbnb, Tesla, Ford, some of the casinos are doing well. The restaurant companies as well, trading higher today. You've got a number of sectors green: communication services, technology, financials, and energy and materials. They are all working. It's the defensive groups that had been outperforming on the month. That's what's under pressure today. Healthcare, staples, real estate, and utilities. NASDAQ up about 0.6%. So we are positive now on the week after 2 days of one plus day of trading. Take a look at treasuries right now after Rick mentioned better industrial production, better retail sales, and treasuries are selling off with yields a little bit higher. Day one of the 2-day Fed meeting, 3.647% is your yield on the 10-year. Let's talk about retail sales.
Yeah, interesting to note, the yield curve, I just calculated again, 3.6 to the positive side. Did drop from about 7 on some of this data.
On the month, so that was good. The other place I look in this data is the control group, which strips...
Ooh, Tesla just popped a little bit. Now at 234.
It directly feeds into GDP, and that was 0.3% month-over-month gain. That was in line with what was expected, and it was revised higher for July, 0.4%. So look for GDP revisions on the upside out of that. If you look at the annualized pace of the control group, like core retail sales from a year ago, 5.7% annualized pace in the last 3 months. So that's the fastest pace since August 2023. If you were out there rooting for a 50 basis point cut tomorrow, there's nothing in this report that would suggest that that's necessary. Then again, the argument is if they're going there anyway, maybe they should just go big. I don't know. I'm more in the 25, sort of just reading.
How could you?
Some of the commentary from the Fed itself. I feel like they just made this turn to start easing. It would be a little dramatic to see 50, but there's been a lot of jawboning out there and people thinking. I think that whatever happens tomorrow, the bigger question and uncertainty for the investors is what is the path? Are they going to 2%? Are they going to 3%? Are they going to 4%? We're 5.25% right now. That's a little bit more unclear. What is the direction of travel here? And then the market can figure out how we're going to get there.
was saying that yesterday during our interview with him, right? The dots are going to be very important.
Dots are important because that's their forecast for how many more.
Of course, their forecast can change too. So
they change
it's
every
not like
3
we
months.
hold them to it, but
they change every 3 months, and they haven't exactly been the most accurate, but sure. And then just a reminder, because this is circulating around all the desks and all the notes today, what happens to stocks after the first rate cut? Everybody wants to know the playbook.
Yeah.
And it just matters whether we go into recession or not, because here's the Goldman chart. Recession after the first cut means that stocks are under pressure.
Man, growth scare looks really good, though.
Growth score looks really good, and that's really just normalization. It's a better economy. It's a soft landing. It's all the things that we think we're in right now. and that's where stocks go up. And then here from Bank of America, they give the exact sort of 3-month and 6-month view for what happens. Obviously, stocks lower in the hard landing scenario by several percentage points, and then soft landing, which would be the best case over a 6-month period, you almost, you get a 10% move in stocks. That's, again, history, which may not repeat itself. We're going into an election. There are all sorts of funky things happening, but that's your historical playbook.
That's a pretty good outline. I think that's pretty accurate. You stick a soft landing and you pull a 95, the market should do great. And I think that's some of what you're really starting to price in on days like today, where you get data it's not on a moving average basis. Okay, yeah, maybe it's normalizing or softening or whatever, but none of it's like screaming we've got huge problems. Again, once some of these lagging numbers are screaming you've got huge problems, it's probably too late. So it kind of makes sense, this consideration around 50, mostly because, honestly, going 50 is more bullish than not, to the point of view of, okay, it increases the chance of the Fed sticking a soft landing. Now, of course, there's going to be some fear around, oh my gosh, what does the Fed see that we don't see, in terms of is this fear mongering, or is this, just them trying to be cautious? And I think that'll just come down to what Powell says. Because if he comes from the angle of, hey, we're just doing this to be cautious. We don't see anything super bad right now, but, by the time we do, it'd be too late. So we want to get ahead of any potential weakening. Could actually be a really good thing. So we'll see. Anyway, with that, I gotta go. So thanks so much for being here.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial...
Oh, remember to go to stockhack.com as well to get actual personalized financial advice starting soon.
This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
Wonder if Palantir went back to green. Everything else seems to be going green. Not quite yet. It's doing so well, though. It doesn't matter. All right, folks. We'll see you in the next one. Goodbye.